Andrew Hardy. Now, let's pause. Let's catch up with all the business news of the day. Jonathan is here with news on Peloton, and tell us more.
Yes, Matthew. This is the American fitness firm that is known for its stationary bikes and gym classes. Now, it was a big success during the pandemic. With gyms closed, lots of people signed up for its pricey offerings. But as the easing of COVID restrictions around the world has happened, people have been tempted back to the gym. And that means Peloton has been left with too much stock and not enough new customers. So it says it's cutting thousands of jobs, and the co-founder John Foley is stepping down as chief executive. Now, some investors seem to like the sound of these changes. The share price was up around 20% in New York a short while ago, but that's still 75% down on where it was a year ago. So let's bring in our business correspondent, Michelle Fleury, who's in New York for us. Michelle, pressure's been mounting on Peloton to make some changes for quite some time, and now it's finally happened. How significant are these changes, and what will they do to the fortunes of the company?
Look, you had the CEO, John Foley, who's stepping down from that role and handing over the reins of power to a gentleman called Barry McCarthy. You've got a company that's cutting essentially 20% of its corporate sort of workforce. 2,800 positions are due to be closed. All of this as it tries to dramatically cut costs. And the reason for this was it was a bit too enthusiastic about this surge in demand it saw for its products during the coronavirus pandemic. It thought that would continue. But as you pointed out, as people start going back to the gym, well, they're not forking out so much money on pricey bikes and treadmills and subscription services, fitness subscription services. And so that is really what's kind of caused a lot of pain. And the CEO is saying it's a humbling experience for it.
So a humbling experience, and it may even lead to a change in ownership. There are these rumours of a takeover being afoot. Do these changes make that more likely or perhaps less likely?
Well, if you listen to what the company is saying, I mean, they still think they have a future as an independent body. They're very much bigging up the new CEO, saying that he comes from a background at Spotify and Netflix, so therefore has a specialism in subscription-based companies, which is really what Peloton is. A lot of, as well as the hardware, it makes money from selling subscriptions to its fitness classes. And it was at pains to tell users, don't worry, we're not touching the content. You know, your favorite instructors are still saying. But if you look at the reaction from the share price, they clearly think that there is some truth to these rumors about it being a takeover target. And the names out there, Apple, Amazon, Nike, you can see kind of how it might fit their strategies. So I don't think those rumors die down. But, you know, for now, at least, the company is sort of sticking to its guns, saying it will stay independent. You just have to look, though, at companies like Fitbit and GoPro and sort of, you know, they were strong consumer brands, but didn't fare so well in the long term as independent companies.
Michelle Fleury there in New York for us. Thank you very much. Now, let's talk about some of the microchips that are actually in those Peloton bikes and plenty of other things, because a takeover deal for one of the most important companies in the technology industry has fallen apart. The US tech group Nvidia was hoping to buy the UK-based computer chip designer ARM from the Japanese conglomerate SoftBank. It was a deal that was worth more than $60 billion. And ARM's chip designs are crucial to everything from mobile phones to cars and computers. But regulators in the UK, the US and the EU all raised concerns over the deal. So David Madden is a market analyst at the investment firm Equity Capital here in London and has been explaining what those concerns are.
It's got to do with fears that the likes of Nvidia would essentially become too dominant in an industry which is becoming more and more important in our daily life. These semiconductors, these chips, are used in everyday objects, be it smartphones, appliances, gaming technology, and also in cars and vehicles as well. In a way, it's one of these kind of almost like industries of the future, whereby it's kind of not come out of nowhere, but it's grown rapidly in the last 5 or 10 years. The way our lives are being led, I think it's going to be continue to be a very substantial part of our lives in the years and decades ahead. And with that, the regulators here in the UK, in the US, and also in the EU are as concerned the likes of if this deal were to go ahead, if Nvidia, the US giant, were to acquire this company, it would then just lead to essentially a handful of major players such as Texas Instruments and Micron essentially control the market. And in a way, it's almost as if every now you hear it's kind of almost in parallel to how some governments and regulators are concerned about the power and influence of big technology companies, let's say Alphabet, Google's parent, or Facebook or Twitter, in the form of data and news flows. There are similar concerns that you don't want a scenario where a handful of only chip makers control a large part of our lives indirectly.
David Madden of the investment firm Equity Capital here in London speaking there. Now let's take a look at some other business news this hour. The UK-based energy giant BP has announced bumper profits for last year. Big increases in gas and oil prices led to a $12.8 billion profit, its best in 8 years. It comes as many households and businesses across Europe and other parts of the world struggle with rising energy costs. Some of the profits come from its significant stake in the Russian energy giant Rosneft. And the head of the European Commission has announced plans for major new investment in the development and production of microchip. That's the aims for the EU to be a world leader in the field. Ursula von der Leyen said that the goal was for the EU to produce a fifth of the world's supply by 2030 and reduce its reliance on overseas supplies. And that's all the business for now. There's plenty more at bbc.com/business. But for now, Matthew, back to you.
Jonathan, thanks very much. Let's stay with business news because the US Justice Department in the last few moments saying they have seized $3.6 billion in stolen Bitcoin in a record haul.